Unless he got a new job, in which case he might. 6,600, 1 minute to expiry. That sounds very dumb. Ooh, the little auto trader took a short position at the bottom of that candle. Stupid. Stupid automated bear. I wonder if it's right. Wait, what if it's right? Nope. Holy shit. Oh my fucking god. Alright, well, I give up. Computer's smarter than me. Or wait, I built it. Hold on. Never mind. $90p is 7x. Yeah. What's the close? It looks like it's 65.87.45. But we did tap VN right at the end of day. Can you ask Auto Trader to start a stream? I really need to tune that thing a bit better, but it should have opened the short here, but it's still fucking me. But anyway, yeah, let's talk about today. We went straight up all day long, very, very slowly, and then broke out a little bit at the end of the day, and then fell back to Vega neutral on the weekly. Out here on ES, we broke above that kind of upside target I had at 65.82. That was apparently irrelevant. And got a new all-time high at 6,625, I believe. Just straight up 6,600. Wonder if I can. No. Ah, that's hard to do. Hold on. I gotta fix that. Can't have it be off. So we'd be looking back here at the longer term trend for a retest, somewhere around the 65.82 level. If that does retest, possibly a breakdown and a pullback, maybe to the prior all-time high. As far as a reversal from here, we're very far away from one. I would say that the only confirmable reversal would probably be like 65.23, which is really far from spot. So we'd have to drop quite a bit currently to get back there. We do have some data tomorrow. We have Michigan consumer sentiment, and it is the preliminary, so it is slightly more important. There's some like EU inflation, I think, and I think we have Great British GDP in the overnight session. So those could have some effect. I mean, if British GDP is up, it's probably bad for the dollar. However, if their GDP is still contracting after expanding finally last quarter, bullish for the dollar, which could fuck up the massive downside we've seen in bonds recently. Oh, but it might also just drive like more buy the dip sentiment on those. But I would say, yeah, Michigan consumer sentiment's probably about the only thing tomorrow that really matters. Um, Dollar today continued to slide a little bit. Yields continued to drive down into the dirt, especially at the top end of the curve. We got the 10-year almost back to 4.0, but the 20 and 30 still remaining up around 4.6. Correlation continued to turn down today, but 1 month correlation still a little bit higher than it was on Wednesday. And 3-month correlation still off of its recent lows back in end of August. So, but still not seeing a lot of interest in dispersion, and we're also nearing the buyout, like the buyback blackout period. So, as buybacks black out, corporate buybacks, dispersion usually breaks down because volatility on equities falls, which causes index volatility to pick up. So, cyclically, like in the earnings cycle, this will provide some upside pressure on volatility if it isn't already. Given that we're at all-time highs and VIX is still around 14, and 3-month volatility is actually pretty high, around 18. So, yeah, I think we're starting to see a little bit of that, but we should see it more pronounced soon. I would say like going into like post OPEX probably. Commodities, silver and copper doing really well, but gold falling a little bit. Oil back down again today after climbing the last couple of days on some geopolitical news. Industrials, materials, nothing interesting. Agriculture's had some moves today too. Bond volatility is still remaining quite low despite multiple days of drops. Carry trade leverage stayed about flat today, but leverage on the short end bumped a little bit. We do see the forward yield on volatility kind of stalling out around negative 18.5%. But the 10 2-year spread is continuing to rise. As that starts to get higher, it should be creating some upside pressure on demand for long volatility as people need to hedge their bonds, which everyone's been buying. Skew, nothing really. This is interesting, despite the move up yesterday. And I do think today's move in breadth probably reversed this, but stocks yesterday, actually below, moving a bit below, like 53% of the index above its 20-day moving average. Meanwhile, we're starting to see stocks above their 50-day moving average fall below 200, the 200-day moving average stocks as well. So there is at least some strong sector rotation going on. Usually one is kind of leading of the other. When you get a big pull down, you generally see like 20-day fall off and then 50-day fall off, and that's where things get kind of bearish, like we saw at the beginning of August. So breadth thinning a bit. Correlation between VX and cash VIX is now down to negative 46.58%. So still a pretty huge amount of vol shorting going on there. And those breakdowns in correlation, as you can see, are pretty rare. They generally are precede very large moves in volatility. So having some long vol protection around now might not be bad. They can last a long time. So, like a month or so. So, I mean, I think that's the longest one on record. Maybe this. Back here, but there was far less interest in playing volatility back then. So, with increased demand, there's increased liquidity. And so, they do in like the last decade tend to persist for 14 to 30 days, but at the end of those we tend to see a very large uptick in volatility, because everyone's so over levered on the short side that it creates a ton of risk, and we're seeing that now. So keep an eye on it. Fed fund futures pricing up, but what's interesting is, like, even though most of the data went the way they wanted it to, we're still a little bit lower than we were at end of August, and today's move was a bit odd. Like moving up into slightly hotter headline inflation is, I think, fairly strange. But you know, there we are. So there's that. And then bear steepener falling back below 50%. That might be somewhat significant. Out here on the daily, we finally retested the long-term trend that we failed back at the end of August for a second time. This is our second test of that trend. The first time we failed it. This is the second one, so we'll see if we fail it here. Obviously, a loss of 65.32 would be the technical breakdown signal, so we've got a rejection there, and then I would say the test of the EMA 30 below that would be the confirmation of a reversal. So quite a lot of room between spot and where we would actually form any kind of bearish signal, but it's there. We'll see what happens tomorrow. We didn't quite test it. We're a little short. I think the actual test is right around like 6,600, but it might not matter. Anyway, I think that's all I got for today. Looks like everything did pretty well. So bullish across the board for equities on the S&P. And I'll see you guys bright and early tomorrow. Later. Oh shit. Martini, thank you so much for becoming a Dillionaire, man. Hit me up on the Discord and I'll get you added after the stream. Just DM me. Peace, guys.